Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me is Sonia. Well, there's no denying that the bulls have a huge advantage. As if it has not been proven in the last 4 days, today the global cues are also chiming positive. It's green across Asia and Wall Street indices as well. Of course, there is some hope that the trade wars will find some truce. But more importantly, look at the combo for India. It's not just global equities. Because of the equity rub-off, most of the steel stocks are up in Asian trade. Yeah. Most of the steel shares in the various countries in Australia, in Korea. As well, crude is down. That's the best combination for India. Because a lot of metal stocks like Tata Steel, Vedanta, Hindalco will get a bump up in the Nifty. And crude being down will give a bump up to BP, HP, IOC. Okay, HP not in the Nifty. But the big push also comes in terms of the sentiment. Is this the third or fourth day in the last 1 week that we are seeing a positive FII number? That's yet another, sentiment booster. But most importantly, RIL gets, Reliance starts with a sentiment advantage. $1.5 billion is not a great deal of money for a company that size, but still that starts on the front foot. So my sense is that there are so many parts over here that are bullish. It's only that the finance sect may not participate in today's rally. For one, they have run very hard. And for another, today's monetary policy, usually ahead of that, you don't see big moves. But what's your sense? Haven't the results seen also contributed to bullishness?
Yes, they have. In fact, yesterday, if you look at, of course, from the heavyweights, the contribution came in from RIL, Infi and HUL. But below the heavyweights, below the surface, if you see all the stocks that hit new highs were because of the results. So whether it was Dabur, Havels, Avenue, Supermarts, even something like an M&M that hit a new high was because Escorts raised the tractor guidance. In that context, today could be interesting because you have good numbers from the likes of, say, an MGL, a GSFC, a Castrol. Of course, Tata Motors is a different ball game altogether. That's under pressure, but the stock has been down and out. But Lata, numbers aside, of course, the market is focusing squarely on numbers. On the policy itself, there is a rate hike that is expected. You think it's sort of something that the market has digested? Because it's been a while that the street is expecting this hike.
Definitely not digested for the bond markets.
Okay.
I mean, it's split. I think the futures, some of the swaps are indicating a rate hike is getting priced in. But it will come. I mean, the market is on a cliffhanger, as it were. Let me start where you left off. Dabur, Avenue Supermarts. I mean, 21% growth in volume. What is it telling the MPC? That, capacity is totally used. Output gap is the jargon. What it means is there excess capacity in the system? If the excess capacity is used up, as this huge demand is indicating, then every time there's more demand, people will have the liberty to push up prices. That's exactly what an MPC would want to avoid. So all these numbers will feed into the MPC. I would look at, we always think of rates, but there are three weapons actually that they have. They can either hike rates or pause, or they can change their stance, and that has a very important part. Yeah. We have a neutral stance is very different from saying we have a withdrawal of liquidity stance. A withdrawal of accommodation stance, that's what it's called. Withdrawal of accommodation would mean that I am expecting a series of hikes. I see that prospect in the future. That can again send a very strong signal, even if they don't hike, the RBI is saying, or the MPC is saying, that I see prospects or scenario of a hike. The third thing they can do is, so far they have a neutral liquidity stance. That is, on some days banks borrow money from the RBI, on some days they lend money to RBI. The interbank liquidity is like kind of as much as it should be. This cash is needed for banks to fill in their cash reserve ratio. Now, what the Reserve Bank can do is to say that I'm moving away from the neutral stance to make it tight liquidity, which means on an everyday basis, banks will have to come and borrow from me. Now, when banks have to borrow, what they will do is they will hike rates and be ready. They'll want to keep more ammunition, more ammo, and that always is a very hawkish sign. So my own sense is that there isn't so much of angst over inflation. I mean, considering the way crude has not crossed 80, considering the way food disinflation is really serious. I mean, remember what those milk vendors were telling us, that unless we take out several million liters and gift it away to Africa, milk prices will crash.
Yes.
In a situation like this, are 2 back rate hikes warranted, would be one question. But the other question would be, because of MSP, this food situation will not remain and it will evolve into something very strong.
And the fact that they are hiking rates, 2 rate hikes, that also tells you that growth has come back, right? And that's something you're seeing in the earnings. So from a stock market standpoint, don't you think it would be a positive?
Yes, if it is a dovish hike, that will be extremely positive. Because for one thing, it means it's one and done. Because it's dovish. There is no case for a hawkish hike. That looks unlikely. I mean, using all the weapons, liquidity, stance, as well as hike, there is no case for that. So if they hike, actually, my sense is it will be positive for the markets, because there's no further worry. And they're doing it because growth is good. So it could be positive. On the other hand, a hawkish pause could be a bit of a niggling worry that God knows what they'll come back with next month. In any case, I think the stock markets are in such a fine spot that a 25 basis is not going to really hurt immediately.
Okay, well, on that note, let's take a look at what our wise experts have to say as we head into trade this morning. Important morning of trade, considering we have so many macro cues. Gautam Chacharya of UBS says the Nifty valuations remain elevated and small and mid-caps valuations are the premium to the Nifty, despite the price correction, is being sustained above the peaks of 2007-2008. He says the Nifty base scenario of 10,500, upside scenario of 11,900 and downside scenario of 8,800 implies unattractive risk reward at the current levels. He says UBS is overweight autos, IT services, private banks and property, and underweight industrials, infrastructure and small and mid caps.
All right. Money market views, although it's likely to be very quiet ahead of 2:30, Praveen Brahmanda Veracity says the rupee will trade with a positive bias on the back of positive sentiment in the domestic equity market. Expects a spot USD INR pair to trade in a range of 68.20, 68.60.
And Najim Magnolia of Edelweiss says the bond markets are expected to tread cautiously ahead of the monetary policy decision. He says there's a probability of a rate hike, but the recent stability suggests that the uptick in yields might be capped even if a rate hike is delivered. Nevertheless, he adds the policy announcement will be followed by volatile movements and the 10-year benchmark bond yield is likely to trade in a range of 7.7 to 7.9.
Okay, and over to Mangalam for the world view.
Well, bright and green cues coming in from the world after an intermittent dip on the Wall Street. The key indices ended July on a high note. In fact, it's been the best month since Jan 2018. Nasdaq, on the other hand, notched 4 straight months of gains. Add to that, the CBOE VIX, which we were pointing out over the last 2 trading sessions, did rise, actually declined yesterday as the markets moved higher. So that one fell by about 10%. One big support for today will come in from Apple. The stock was up 4% in after hours trade, so that would support the Nasdaq, as well as some support coming in on the Dow. Key cues from the central bank meetings: we have Reserve Bank of India today, US Fed today as well, and Bank of England tomorrow. So that is something the street will be watching out for across the world and across the Atlantic. Green cues coming in from the European indices as well. There are reports that US and China are looking to resume negotiations to avert a trade war. Emerging markets, divergent cues coming in out there. The Russian index doing fairly well, while the Brazilian index lower in yesterday's trade. However, the Asian markets, all of them fairly positive. The Korean markets led higher by a couple of metal stocks and a lot of those component suppliers to Apple after good results coming in from Apple. On the back of all of this, the SGX Nifty, a bright green start there, closer to that 11,400 mark.
Oh yes, it actually touched 11,400 earlier, so now 11,399. We'll take it with both hands. The spot may be about 10 points lower. But all eyes are going to be on the Reserve Bank as it prepares to announce the monetary policy decision. Jahangir Aziz, Asia Economic Research Head of JP Morgan, joins us on the phone line. Good evening to you, Jahangir. I think you're joining us all the way from New York. Thank you very much. Well, what's the sense? Is it a dovish hike, a hawkish hike? What are you expecting?
Well, I'm expecting a hike. And I'm guessing it will be accompanied by a very cautious language. And I think that, there are reasons for that, both on the inflation front Core inflation has been very sticky. You've seen the MSP price increases. But separate from all of that, I think there is still the very looming question of financial stability, which is basically expressed in terms of, rising current account deficits and the fact that the dollar continues to gather strength. And I think, the same arguments that were made in June, that financial stability would play an important role in terms of deciding whether the RBI would hike or not. I think those same arguments remain. I think probably that's strengthened now rather than weakened. So I'm expecting them to hike today.
Okay, so there's a hike that you're expecting and a cautious view from the RBI as well. Jahangir, good morning. What about on growth? Do you think growth has made a decisive comeback, or is it because of the GST, impact last year that growth is looking good, especially in earnings? And what do you think the RBI could say with respect to growth this time?
My guess is that we'll continue with the same language, which is that growth is recovering from, the GST and the demonetization effects. It still hasn't reached, on the external front, it hasn't really got to the point where it is back to where it should be. So there's ways to go. And I think it will say that investments, there are signs that investments turning around. But my sense is that it will also caution that, the fact that you have such a large public sector borrowing this year, and the fact that, it's just not the central government, but also the state governments, which seem to be, continuing to run very large deficits. The moment you see even the hint of investment turning around, all of that now has to be financed by foreign borrowing, i.e., a higher current account deficit rather than domestic borrowing. And I think that is something they will point out in terms of, of where the growth is coming and what is funding the growth.
Okay. Well, I did a dipstick survey yesterday night, so I guess it can't get more latest than that. What happens if there is a hike? The bond market participants, all of 5 of them, not too many, said that there will be a rise by 10 to 15 basis points in the 10-year yield if there is a hike. And if there is a pause, yields may fall by between 5 and 10 basis points. So we are standing at 7.8. Another 10 to 15 would mean 7.9, 7.95. Jahangir, at yields like this, close to 8, does it endanger growth? Because, you will expect other parts of the curve also to rise, for instance, bank lending rates.
No, I mean, there's always a trade-off between whether you are looking for short-term growth or you're looking for medium-term sustainability. And by medium-term, I don't mean 2 to 3 years out. I mean, basically 2 to 3 quarters out. So if you're not willing to do what is needed in order to ensure that at least in the next 3 to 6 months there is sufficient amount of macroeconomic stability, we are going to end up doing exactly what we did in 2011 and 12, where we did not hike as much as we needed to do.
Okay.
And then, once the trigger came, we went into the brink of a crisis. So, that's basically the trade-off.
Okay.
And that trade-off remains exactly the same.
No, take your point on that. It's just that people have not been very bullish about GDP rates anyway this year. Now, a final question to you. The yen has been depreciating. Won't that weigh on the policymakers? I mean, if you strengthen, a rate hike is going to strengthen the rupee. Do you strengthen when when this big boy yuan is depreciating by the day?
That is true. The fact that the depreciation against the dollar, I'm guessing about half of that at least has been offset by the depreciation of CNY. But at the end of the day, it isn't so much about competitiveness that you're worried about at this point in time. You're much more worried about the fact that if you're not going to take enough amount of insurance at this point in time, given the fact that there is no sign that the dollar is actually going to start weakening, given the fact that European growth still hasn't managed to narrow the gap between European growth and U.S. growth, and therefore you are going to continue to see U.S. dollar strength. That is where I think the bigger problem is, that there's always going to be pressure on the rupee, and where do you draw the line? Do you draw the line that the rupee weakening is going to start filtering into inflation, or that the rupee depreciation could very quickly turn into large capital outflow that we've seen in 2013? And I think that financial stability question is going to be the one, I'm sure that inflation, etc., growth, etc., will play a role. But I still think that just like in June, I think that's the question that will be the one that will determine whether there are raised rates or not.
All right, Jahangir, we leave it at that. Thanks so much for joining us. We will touch base with you once the announcement comes through. Of course, that's JP Morgan saying they expect a rate hike today. The RBI could be preemptive in its rate action in order to bring inflation closer to its midpoint target of 4%. But let's move on. The markets have climbed every wall of worry. 4 straight days running now, the markets have been hitting new highs. Arvind Sanger, the managing partner of Geosphere Capital Management, joins us now to talk about that. Arvind, hi, good morning. How the tide has turned since the last time we spoke. The markets are extremely optimistic now. Do you think it's because of the way earnings have shaped up? I mean, growth is picking up, especially in spaces like the consumption, consumer durables, etc. You think this is an earnings-led market recovery that we're looking at?
Well, yes, earnings certainly have helped, but I think the macro environment has helped. Oil prices have become more subdued, have come off a little bit, and I think global trade war fears have receded. So I think there's been 2 or 3 factors that have helped drive, and frankly, the monsoons, are showing signs of being, pretty solid. So therefore, I think when you put all those factors together, yes, the earnings have provided the most proximate cause. But as you will notice, it's been the large cap and the Nifty that have led the rally. The mid caps have rebounded off the bottom, but are still well off their highs. So I think that some of the bellwether market leaders are leading, but we're also seeing some important laggards. Whether it's an SPI or an ICICI Bank, which are seeing a solid recovery. So I think in that sense, it's a heartening rally, and it's good to see that it's more broad based than just a couple of winners that keep winning.
Okay. Good evening, Arvind. First, let me put 2 or 3 things out of the way. The Fed may pause and the RBI may hike. Will either disturb the market?
No, I think both are expected. So the markets don't respond either way to expected news. If something does happen after the news comes out, it may be because of other factors, but I don't think either one is a surprise. So I don't think by themselves they should drive the market.
Okay. Well, now let me come to the spot where the market is now, 11,400 thereabouts. Are you a buyer? If yes, where?
Well, I am a buyer, but I'm more of a buyer of some of the mid caps that have corrected a lot. In the broader market, I think to the extent that the NPA cycle seems to have run the worst part of its course, and we can start to look at some of the banks as a loan recovery. As you can see, corporate confidence return, maybe the corporate capex cycle returns, maybe the corporate borrowing returns, and therefore some of the lagging banks, like an SPI or an ICICI, those certainly become very interesting amongst the larger cap names. And then, amongst the mid caps, there are specific companies where, we have had pullbacks. We've had a bit of a rebound in some of them, but I think there are opportunities in some of those names too.
Okay, Reliance Industries has reclaimed, market cap leadership, Arvind, and in fact, it's been the driving force of the market as well over the last few days. Given the big push that we're seeing from the telecom vertical, do you get a sense that there's more to go for this one?
Well, it certainly could be, but keep in mind that what Reliance is achieving in the telecom world, the telecom competitors are not. So, Idea had pretty challenging results, and, part of these results were not anything to write home about. So it's clear that Jio has, played the telecom side of the cycle quite well, and the retail business seems to be coming along. So it's really those 2 engines, more than what refining margins are doing or petrochemical is doing, that are going to be the pace setters for Reliance, going forward. And there are several catalysts along the way. At some point, You could see an IPO of the retail business in the next 12 months, and you could see an IPO of the telecom business in the next 24 months. And if they can keep executing on the, on both fronts, particularly the telecom front, then, between having the market leadership on the telecom side and being a big mover in the content side, this could be a very interesting play, but in a very energy way as we used to look at it historically, but more as a telecom/retail stock.
Okay, at a Nifty level, are we at exuberance point, or do you think these are justifiable levels given the growth?
I think, people have been hiding out in some of the market leaders, whether it be a Reliance or an HDFC Bank or or a TCS. So, that's where we want to look at indicators, and indicators are good in some and not so great in others. But I think as we're seeing the broadening of the rally, as I mentioned earlier, when the SBIs and the ICICIs and others, which are not stretched in valuations by any stretch of imagination, if those are now joining the party, and we can see fundamental reasons why those might, then it doesn't look like the Nifty is stretched if those join the party. Yeah. On the other hand, I will say that overall market multiples are not cheap, and all the macro risks are not out of the way.
Okay, actually, exuberance is very apparent in the consumer stocks. Just anyone you pick is trading at 50 times plus. But is there still a bargain? I mean, yesterday, for all that valuation, and of course, Dabur is valued a little lower than the others, but it caught up in no time when it announced a 21% rise in its volumes. I mean, 21. HUL's 12% took our breath away, and this one is 21. Do you think that they are justifying their price?
I think that the consumer sector has clearly been, to be perfectly honest, over the last 3-4 years, it's been the rock on which, whether it's the banks that are relied on or the consumer companies. The consumer has been amazingly resilient. And so I think that remains strong. And now we are seeing a little bit more strength on the rural side, which was maybe missing a year ago. And again, the effects of GST being behind us, we are seeing some positive momentum there. So I think consumer stocks are seeing good support from business fundamentals. But I have had a hard time buying the headline consumer, the market leading consumer names, which are trading in many cases at 1.5 to 2 times their earnings growth in terms of PE multiples, and that 2 times PEG is kind of high end for anything that we would ever look at. So we have a hard time paying those kind of multiples.
So since the last time we spoke, has the foreign investor interest with respect to India improved at all? I mean, there have been a lot of sort of concerns with respect to foreign investor participation, but some of that has been allayed. We've seen FII buying for the last 4-5 days. What's your own sense on how things could shape up from here? Well,
I think the global fundamentals remain well behaved. And we're seeing that, although the dollar has been a moderate headwind, but it hasn't continued to rise up. And I think even the China news has become a little bit more benign. China is providing more, financial and economic support to its companies and to its financial system to try to offset the effects of any trade war. And there's signs that trade tensions are maybe not boiling over. So all of those are giving global investors a little more comfort that, stepping out of the U.S. into emerging markets and certainly into a market like India, where the fundamentals underpinnings are good, when the macro risks seem to be a little bit less, I think that could continue. But, I keep an eye on the risks, but to the extent that, neither the political front nor the inflation front in India seems to be causing an upset of the apple cart, I think India will remain one of the favored destinations for FIs when they get confidence about global fundamentals being stable.
Okay, Arvind Sanger, on that optimistic note, thank you very much for joining us. There is optimism in the air. Look at the SGX Nifty, 11,400. We'll take a break. We are coming back and telling you the pillars on which the Nifty may rise or fall. The top 10 list of stocks to watch for the day.